Hi everyone, Kathy Lean here with BK Forex. So now that the FOMC announcement is out, we know that they raised interest rates by 50 basis points. They lowered the GDP forecast for next year, raised their unemployment rate forecast, and also raised their inflation forecast. So I think growth will be weaker, jobless rate will be higher, and inflation will remain high. From Fed Chairman Powell's press conference, here are the top 10 takeaways. Number 1, 17 out of 19 officials see peak rate over 5%. But they also see the economy having slowed significantly since last year. That's number 2. Number 3, FOMC sees upside inflation risk. Number 4, they need a lot more evidence than 1 or 2 CPI reports to believe and to have the confidence that inflation is falling and to stop raising rates. Number 5, they still think that 50 basis points is a historically big move. And number 6, with this move, they see rates in restrictive territory. Unfortunately, number 7, they think that history warns against premature loosening or talking about rate cuts. So right now, the focus is how much they're going to raise rates, not when they're going to begin to cut rates. Number 8, the labor market is still very much tight. And as a result, number 9, peak rates could be revised higher. Their estimates of where rate hikes will end could be revised higher. Number 10, there are more rate hikes to come, but the February decision will depend on data. So we've got 7 weeks before the Federal Reserve meets again on February 1st. A lot can change from now until then, and that's why Powell is telling us that he's going to watch the data to decide before they decide what their next steps are.